Gang, welcome back to my channel. It's your boy Holistic Profit, representing always stuck in profit. You know the drill. Alright guys, as promised, I told you guys I will coming out with a series that's going to be titled How to Get Started as a Forex Trader in the Trading Industry. And this series is going to take you all the way from being a beginner to an advanced trader. Alright, so now all you just have to do is subscribe to the channel and like the video, guys. If you gain value from it, you can share and also comment below what you want me to talk about in my next video. So let's get started now. What is forex, right? Forex is an acronym for foreign exchange, and the forex market is a global market for exchanging of currencies. It is the world's most largest market with a net cap of $6.6 trillion, right, on a daily basis, guys. And one way or the other, you might have participated in the foreign exchange without knowing, right? So now let's take, for example, you're buying something, a goods or a product online, and it's being sold in the foreign currency, like let's say the dollar, which is the most traded currency in the world. Now let's take, for example, you're buying that goods in dollar. You have to change your naira to dollar. So in that process is what we call foreign exchange, right? So you might have participated in it one way or the other. The forex market is so good in a way that the profits goes all the way from the hedge funds, the investment banks, down to the retail traders, which is me and you. All right, so now what is forex trade? Now I just said forex means foreign exchange. Now what is forex trade? This is you engaging, as I stated here, guys. It said forex trade involves you engaging in contracts for difference, also known as CFD. This is you buying or selling one currency against the other, meaning you're trading the fluctuating rate of those currencies, right? As you're trading the fluctuating exchange rate of those currencies. Now what is an exchange rate? An exchange rate is the price paid for one currency against the other, right? So now you're trading those fluctuating rates. Who are the major players in this market? Who are the people involved in trading this market? So trading this market, we have the major players, which are the banks, the central banks, the hedge funds, the investment banks, and other big financial institutes and cooperatives, right? And also we have me and you, which are also the minor players, which are the retail traders who are also involved in the market. But note these, guys, the retail traders don't move the market. The market is being moved by the major players, which are the central banks, the hedge funds, the investment bank, and the financial institutions. Now these people are the major players. They are the ones who push price from one point to another. All right, so now those are the major players in the market, right? Also the central banks, which are involved in setting of interest rates. So we're going to see all this. We're going to see the meaning of interest rates and the roles of central bank as we proceed further. All right, so just stay put and enjoy the ride. All right, so let's go to the next subject matter, which is terminologies used in the forex industries. Now whenever you come into a new field, whenever you're going into a new field, the first thing you want to do is learn those terminologies that are mostly used by the traders, by people that are mostly used in that field, right? So you would know what someone is saying whenever you're communicating with your fellow traders, right? So I've made a short video about the trading terminologies, and I'm going to embed the link to this video so you can also watch it, right? So let's proceed to the next subject matter, which is currency pairs, right? So let's proceed to currency pairs. Remember I said you're dealing with what we're dealing with is what? Foreign exchange. So now what are you exchanging? You're exchanging those currency pairs. As a first trader, you're trading currency pairs. You're trading one currency against the other. So remember I said you're engaging in an activity called contract for difference. So you're changing the exchanging rates between two currency pairs, right? So now let's see those currency pairs we're trading, guys. All right, guys, so now you see I stated that currency pairs. A currency pair, as the name implies, are two currency paired together and traded against each other, right? Remember I said you're doing what? You're trading the fluctuating exchanging rate of two currencies, right? So now what are these types? Now let's look at the types of currency pairs. Right now we have two types of currency pairs. We have the major currency pairs and we have the minor currency pairs. Now the major currency pairs are the most traded currency pairs, and they mostly have the highest volatility in the market. All right, so now let's look at these major currency pairs. We have the AUD USD, we have the GBP USD, we have the USD JPY, the NZD USD, Euro USD, USD CAD, and then we have the USD Swiss franc. Right now these currency pairs are in acronym of the full currency. Like the AUD USD will have Australia, it also means Australian dollar, US dollar, while the GBP USD is the Great Britain pound and the US dollar. And then we'll have the US dollar against the Japanese yen, then we'll have the New Zealand dollar against the US dollar, then we'll have the euro against the US dollar, the US dollar against the Canadian dollar, and the US dollar against the Swiss franc. All right, so now we have also the euro paired against the Great Britain pound, and then we'll have the euro against the Australian dollar, and so on, guys. Then we'll have, now you could see these currency pairs are paired in two, and these currency pairs, and when whatever you're doing as a forex trader, whether you're buying or you're selling, you're always attacking the base currency, right? So now what is the base currency? The base currency, this is the first currency in the currency pair, and it is mostly said to be the strongest, right? Let's take for example, we have Great Britain pound against the US dollar. Now the Great Britain pound is stronger than the US dollar, right? So we already know that it's already established, right? So now these currency pairs are being paired by your brokers, so we're going to get to that as we proceed for that one. All right, so now we have the base currency. The base currency is the first currency in the currency pair. Now this is the base currency, as I stated here. This is the base currency, which is the Australian dollar, and the quote currency, which is the US dollar. Right, so now the base currency is the first currency, while the quote currency is the second currency in the currency pair. And also note, whatever you're doing, you're always attacking the base currency. Meaning, if you're buying, you're seeing the Australian dollar is going to gain value against the US dollar, and if you're selling, you're also seeing that the Australian dollar is going to lose value against the US dollar. So that is whatever you're doing in the forex market, you're always attacking the base currency. Right, guys, so now let's proceed further. All right, so now I want you guys to also know that the forex market is open. The world forex market is open 24 hours and 5 days of the week, open from Monday to Friday, and also it is being open 24 hours and 5 days of the week, meaning you can trade from Monday till Friday, and also you can trade from the opening of the day, from the start of the day till the next day. But however, because you have other activities to engage in, and because you're also doing other things that you won't want to be sitting down on your charts doing the trading business the whole day, and that is why the market has trading times and it has trading session, right? So the trading times and the trading session, so we have 3 major sessions. Okay, you should also calculate the time based on your own time zone, right? So the time zone differs for Nigeria, and for Nigeria the London session opens from 7 a.m. in the morning to 4 p.m. and then the New York session opens, and also the New York session opens from 1:30 p.m. to 10 p.m. every day of the week right now. And then we'll have the Asian session, which also opens from 10 p.m. down to 6 a.m. and I paired the Asian session with the Tokyo session. Now the Asian session starts from 11 p.m. however the Tokyo session starts from 10 p.m. So these two sessions almost have the same currency pairs trading at a high volatility, so they are being paired together, the Asian and the Tokyo session, which are all these two sessions are what made up the Asian session, and that's why it starts from 10 p.m. down to 6 a.m. in the morning, right? So now the New York session also you have what they call the cross session. Now this cross session, or you call it the session over, or you call it the session overlap. Now this overlap happens when the New York session opens while the London session is still in its trading period, right? Let's take for example the London session opens from 7 p.m. and by 1:30 p.m. from 7 a.m. and by 1:30 p.m. the New York session opens. So By 1:30 p.m. we'll have high volatility because now we have two sessions which are running at that particular time, and then you have mostly see currency pairs that those cross session, those over that has that overlap trading at a high volatility, right? So now that's why we have the London session overlap, and then we have the Asian session overlap as well. So now this overlaps brings more volatility in the market, and you might have heard me say volatility countless times. Now this volatility simply means volume. It means with the London session traders are still trading, and we have more traders coming into the market during the New York session. Alright, so now this session brings more volatility. I trade based on sessions, so during these sessions are when I expect price to expand towards my direction.